PMI and mortgage insurance. Let's talk about that for a minute. What it does is, number one, is it protects, let's start over. PMI and mortgage insurance is on almost every loan. Unless you put 20% down, chances are you have it. Now, what does it do and why is it required? What it does is it protects the bank in case the borrower doesn't make their house payment and the bank has to either short sell the property or foreclose on it. The banks come up with this 20% rule because almost every home can be sold in any market for 20% on the dollar below what the original price was. So that's where that 20% down payment comes from. To get rid of the PMI for free is you're automatically taking away the bank's risk of losing money if the home is sold in some type of a hardship. So it insures the lender if you don't put 20% down. If you put 20% down, they're not going to lose money, pretty much. Number two is PMI gets cheaper the more money you put down, starting with 5% down payment, 10%, 15%, and 20%, meaning it's in 5% increments. So the more you put down, you want to make sure that you're hitting one of those numbers and not being, a percent or two away from it, because you're going to save money if you can put a little bit more down to get to either 5%, 10%, 15, or 20. Number three is PMI goes away on a conventional loan. It's kind of like car insurance if you think about it this way, because PMI is insurance. It stands for private mortgage insurance. So on a car, when you have a loan on it, the bank could lose money if you crash the car, so you have to have full collision coverage, right? So if you pay the car off, then you can have general liability if you want to. So it goes away, the full collision coverage goes away to liability if you choose. On a conventional loan, as soon as you've paid the loan down by 20%, either by you making your regularly scheduled monthly payments or a big down payment, to pay more down on the loan, the PMI will cancel. Or you can ask if your home has gone up in value because the market has increased, then you can request the bank to lower it. And they may be willing to do that if you've been paying them well for a couple of years. Most times in this market, they will. On FHA loans, it's on there for the life of the loan. So you're really kind of stuck with it unless you refinance or sell the house if you have an FHA loan. VA loans do not have PMI. That's one of the rare loans out there that is that way. So if you're a veteran, good job. Thank you for serving our country. Everybody else, let's try to put 20% down if we can, but you don't have to. Thanks so much for watching. Have a great day.